all sitting here and waiting for the Liberation Day tomorrow. But I do think that it's a place where you have to be quite diversified, because you were talking about the European equity markets have outperformed first time since the global financial crisis. And if you are a global investor, which you are in luck, you can reallocate between different regions. For me personally, we have been quite more heavily involved with the European equities and less of a US to start with. So the starting point actually matters. And for the longest time, as we were saying, it's easier to invest in US. It was a no-brainer, US exceptionalism, and the money flows there. So that has been a really, really big headwind for our performance. So we mostly focus on the bottom-up and alpha generation. Now it feels like at least it's balanced, and within that you can play different themes, different sectors, different individual names.
I'm glad you said starting point matters, because we have this long-running debate about just how dynamic some of the funds are because they're positioned for the long term. But in a moment like this, it must be impossible to be positioned for the long term, because your short-term performance can be so dramatic in terms of aiding or destroying that long-term performance. Would you agree?
I totally agree. I mean, I find myself thinking about, I'm not necessarily focusing on making money at the moment. It's focusing on volatility of the performance. Exactly, not losing money and actually focusing on the downside. And if you can do that and make sure that the portfolio is a bit more resilient and exposed to a lot of different factors, a lot of different regions, then as you can see, some places actually are working, some places not working. But overall, if you are focusing on individual companies that are good quality companies, cash generative, they have pricing powers, they will come out of this. Do
any of the big tech names fit that build for you stateside? Because that's where you've seen the steepest correction.
Oh, I tell you this. I always felt like, so European equities are a little bit more cyclical, right? They have more energy and financials in there. And US growth stocks tended to be defensive, because these are strong companies, strong balance sheets, they generate revenue, they're very profitable, and they don't have debt. And if we are thinking about that the risk of recession is coming up, you want to look at the companies that are going through this recession and come out on the other side stronger. So if you, as you say, starting point, if you don't have a lot of these, I think you can start tilting towards carefully. I do know that the systematic big positioning hasn't been flushed yet. Fast money has moved, and that's what we are seeing performance so far. But in the longer term, I think having that balance helps.